Welcome to This Explainer. Today, we're diving straight into a really fascinating web of market dynamics, and we're drawing all of this from the research framework put together by Jalen Cassidy over at Advanced Real Estate, which is brokered by Silver Creek Realty Group. So if you've ever found yourself wondering how on earth a headline about foreign markets actually ends up hitting your wallet, well, you're in the right place. We're going to break down exactly how global markets connect right to your local real estate, cutting through the hype and focusing on the facts. Let's just kick things off with what might sound like a totally bizarre question. Why would a home buyer in Idaho care about what's going on in Japan? I mean, on the surface, they seem completely unrelated, right? But the reality is, in our highly interconnected economy, financial decisions being made literally halfway across the world can and do eventually influence the monthly mortgage payment on a house sitting right in your neighborhood. You see, real estate is almost never driven by just one single isolated event. It's more like this massive, complex puzzle of global forces. We're talking inflation, Federal Reserve policy, government debt, treasury markets, and yep, foreign currencies. For today's explainer, we're zeroing in on the weakening Japanese yen and rising inflation over in Japan. When the yen loses value, importing goods gets a lot more expensive for Japan, which sparks inflation. And when inflation spikes, well, governments have to step in and do something about it. Now, if you follow the financial news, you might have heard a specific term lately: the Japanese yen carry trade. Hey, don't let the jargon intimidate you. Basically, for years, massive financial institutions would borrow money in Japan for practically pennies because of their rock-bottom interest rates. Then they'd take that cheap money and invest it globally to snag a higher return. It was kind of the ultimate global banking loophole. But as Japan faces this rising inflation and serious pressure to finally raise those historically low rates, that entire massive investment strategy is suddenly being totally rethought. So let's look at Jalen Cassidy's reasoning process here, because it's all about following the dominoes instead of just reacting to flashy headlines. First domino, rising inflation in Japan. Second domino, that forces policy shifts from the Bank of Japan, like bumping up interest rates. Third domino, those changes alter the global demand for U.S. debt. And the final domino? That shifting demand eventually impacts our own domestic borrowing costs. It's a straight line of cause and effect. To really grasp that third step, we have to talk about the sheer scale of global debt. Japan is actually one of the absolute largest foreign holders of U.S. Treasury bonds. And those bonds, that's how the United States government finances its debt. So they desperately need buyers. Because Japan holds such a gargantuan amount of these U.S. treasuries, any little tweak in their investment behavior instantly grabs the attention of the entire global financial market. Okay, so why does all of this international finance stuff matter to the housing market? Well, it's because U.S. Treasury yields are one of the main drivers of our domestic mortgage rates. If the demand for U.S. Treasuries shifts, the yields can push higher. And when yields go up, mortgage rates almost always follow right along. It's a perfect and, yeah, maybe a bit frustrating example of how the global economy literally walks right up to your front door. Section 1. Bringing it home and looking at the reality in North Central Idaho. All right, now that we've connected the dots from the global scene down to the national level, let's bring this macroeconomic chain all the way home. Because national headlines often miss what's actually happening on the ground in communities like Kamiah, Kuskia, and Grangeville. Based on Jalen Cassidy's local observations, the big issue right now isn't a lack of interest in buying homes. Not at all. The real hurdle is that higher mortgage rates simply mean buyers qualify for less house. At the end of the day, it's the monthly payment that is driving absolutely everything. And this affordability challenge? It's getting even more complicated because of something economists call the lock-in effect. Think about it. Millions of homeowners locked in mortgage rates around 3% a few years back. Let's be real, giving up a 3% rate is a really tough pill to swallow. If those folks sell today, they have to trade that incredibly low rate for a significantly higher current rate, which means a way higher monthly payment. So what happens? Families just stay put, and that keeps the overall housing inventory super tight. You can see the shift so clearly. If you compare the absolute frenzy of the 2021 real estate market to where we are today, it is a completely different landscape. The buyers certainly haven't disappeared. People are absolutely still relocating to North Central Idaho, but their whole approach has shifted. Today's buyers have more choices, they're taking a lot more time to make sure the numbers actually fit their budget, and they are definitely negotiating a lot more than they used to. Honestly, from a professional advisory perspective, moving away from that rushed, fear-based buying environment we saw a few years ago is actually a really good thing. Today's balanced, thoughtful market is just a much healthier, way more sustainable environment for families. Buyers actually have a minute to think and breathe. Sellers have to work a little harder and compete through really good pricing and presentation. It basically allows everyone to make decisions based on actual understanding rather than sheer panic. Moving on to Section 2, making wise real estate decisions and the principles for navigating today's market. All of this global and local dynamic stuff is really only useful if it actually helps you take practical action, right? So if you're a buyer and you've got your finances in order and you happen to find a property that perfectly fits your family and that monthly payment feels comfortable right now, today, you really shouldn't let market uncertainty hold you back. Make your purchasing decisions based on today's solid facts, not tomorrow's wild predictions. Because here is the thing. There's a massive hidden risk in just waiting around. Sitting on the sidelines, hoping and praying for interest rates to drop, can completely backfire on you. Why? Well, the second that lower rates start improving affordability, a giant flood of new buyers comes rushing right back into the market. That immediately spikes competition, and more competition almost always drives up purchase prices. So waiting for that perfect interest rate could literally just mean you end up paying way more for the house itself. Now, for the sellers out there, navigating this market requires a bit of a shift in expectations. First off, do not get discouraged if your home sits on the market a little longer than it would have 2 years ago. Buyers are definitely still relocating to North Central Idaho. But because they're feeling that affordability pinch and being a lot more selective, your pricing has got to be dead on from day one, and your property presentation has to be nothing short of exceptional. You just need a little bit more patience these days. This whole analysis really boils down to a core philosophy from Jalen Cassidy, which is this: don't wait for the perfect market, wait for the right opportunity. Success in real estate isn't about perfectly timing some crazy global economic cycle or waking up and checking the Japanese yen every single morning. It's really just about waiting for the right home, the right financial setup for you, and a plan that truly serves your family's long-term goals. As we wrap up this explainer, I want to leave you with a question to chew on. Are you letting global headlines paralyze your local decisions? When you understand that chain reaction, from Tokyo all the way down to your local neighborhood, it empowers you to just step away from all the hype. The market is never going to be perfect, but your next move definitely can be. So based on the market we are living in right now today, what is the absolute wisest real estate decision for your future? Think about it. Thanks so much for joining us, and keep making those wise decisions.